Hello, everyone. This is Todd Brown with Senior Insurance Marketing. And today we have on our webinar Nick Micheletti from Heartland National. I'm going to talk about the hospital indemnity product. What a great product for, it's hard to believe we're approaching AEP season just in a few months here. And this is the product to have in your toolbox during AEP season and even after AEP season as well, too, to go and follow up with the clients after you wrote a Medicare Advantage policy with them. It's a perfect product, and again, tell us more about it is Nick Micheletti. And Nick, take it away.
Thank you, Todd. Yes, I'm Nick Micheletti with Heartland National Life Insurance Company, and today we're going to review our hospital indemnity plan. But before we do that, I like to make sure agents understand kind of the big picture of this type of product and why they should be writing it. So what we'll do is we'll first talk about why you should sell hospital indemnity plans to your clients. But also to Todd's point, we're getting close to AEP. You can certainly write them during AEP. You can write them after AEP. With this product, you can write it any time of the year. And you do not have to be AHIP certified. So there's not those, that red tape in order to sell this product or certain different enrollment periods to sell it. You can sell this product all year round. You do not have to be AHIP certified. If you reach out to Todd in Senior Insurance Marketing today, we have one of the slickest contracting systems in the industry. I would say it's the best. They can get you a contract sent to you via an electronic link to your email. And once you complete that, it usually takes us about 24 to 48 hours to turn that contract around and get you approved. So today being Tuesday, reach out to Todd, get that contract, complete it today, and we'll have you contracted and ready to go by the end of the week so you can meet with clients over the weekend or start your week off right next week with our hospital indemnity plan in your agent toolbox like Todd had mentioned. But why sell this product? Well, it's obviously an opportunity for you to earn new income, especially during AEP when you're out there running and gunning and handling all of your Medicare Advantage plan enrollments. You're not getting paid on those policies until after the effective date. So typically after the first of the year, maybe mid-January or late January. So how are you subsidizing your income during AEP when you're out there working and doing those Medicare Advantage plan enrollments? This product is a great opportunity for you to help subsidize that income by writing hospital indemnity plans. And really what it's doing is giving your client more well-rounded coverage. So not only are you as the agent getting compensated for it, but your client's having more well-rounded coverage by offering this product to help fill the gaps, especially those gaps in Medicare Advantage plans. The product goes down to issue age 18. So we do have some agents writing it in the underage market as well. To fill the gaps of maybe like ACA plans or high deductible plans that they have. But it certainly fits like a glove around the Medicare Advantage plan exposure with the different copays that your client may be exposed to. Because, of course, there is a trade-off for a $0 premium, which is copays that your client will have to be responsible for. So as an agent myself, I feel like we're not doing justice to our clients if we're not incorporating the hospital indemnity plan into our Medicare Advantage plan presentations. Really, we're educators, right? So we're educating our clients on the different Medicare options they have, whether it's a Medicare Advantage plan or a Medicare supplement plan. So we need to be educating them on the different copays that they're responsible for, and then also help provide them with the solution to those copays, which is exactly what the hospital indemnity plan is designed to do, which will in turn benefit your client and then benefit your pocketbook as well. And we pay commissions incredibly quickly. As you can see on here, this is a simplified issue product with a guaranteed issue period between 64.5 and 65.5. The base plan and all of the riders would qualify for that guaranteed issue period outside of the lump sum cancer rider. There's two questions that will always need to be asked for that lump sum cancer rider in order to take out that coverage. But the base plan and all the other riders fall into that guaranteed issue period of 64.5 to 65.5. A unique opportunity for your client to take a plan like this out where they may not have had the opportunity to do so before. And we do not reduce commissions on guaranteed issue business like you may see out there kind of in the Medicare supplement space, reduction in commissions for GI business. We pay the same commissions for guaranteed issue business as we do for fully underwritten business. And again, it's simplified issue. You write an e-app on Monday for us. Typically, you're going to see a deposit in your bank account on Thursday or Friday of that same week. With your commission deposit into your account. So again, a great product to help for your clients, give them more well-rounded coverage while offering that commission to you as the agent for doing your job and being an educator. paying that commission incredibly quickly because we know it's a simplified issue product. As long as your client answers no to those health questions, we're going to issue that policy and get you paid. What you'll see in some of the examples in our upcoming slides, it's incredibly affordable for your clients. Roughly about a low $30 premium will cover the hospitalization and adding the ambulance rider. So it's incredibly affordable for your clients, especially for those clients who may have been on a group health plan, paying $200, $300, $400 a month. And then you're bringing them out down to a $0 premium Medicare Advantage plan. Maybe they're in an area that they're comfortable with the network and comfortable with the out-of-pocket costs there. So, used to paying $300, $400 a month, do you think they've got the additional $30, $40, or $50 a month to give them more well-rounded coverage with their Medicare Advantage plan? I believe they do all day long. Adding a product like this will also help increase your persistency in the home. As we know, having 2 or more products in the home is going to increase your persistency dramatically. And not only that, but with the way we've created this product where you can choose your base plan and add any or all of the riders to it, you're really customizing this product to your individual client. And when you get your client involved in building the product, we've seen that the persistency on the product stays on the books drastically longer when you get your client involved because you're building a product specifically for them. And then lastly, the Medicare Advantage plan market is booming as we speak. I think we're over exceeding some of the expectations for enrollments into MAPD plans. These plans are getting stronger in terms of benefits. They're getting stronger in terms of networks. And as they're becoming more popular, these companion type products like a hospital indemnity plan will just continue to grow with that market. So make sure that you're staying abreast to these different plans that are out there and offering to your clients, and then letting them make that decision on whether they want to protect themselves in the event of a hospitalization, or maybe they've got savings put aside where they'll be able to pay out of pocket for it. But we definitely want to make sure we're presenting the product to them. So for our new agents, I really like this slide here because it kind of brings Medicare down to something basic that we can all understand and keep it really simple for everybody. On the option on the left-hand side here, you've got your Part A, Part B coverage, and then adding a prescription drug plan to that coverage. So again, these are your common options for people at turning 65 and aging into Medicare. And then that option on the far left is just having A and B with the prescription drug plan. Now, Part A is typically no cost to your client as long as they've worked 40 quarters or 10 years. Part B does have an additional premium for that Part B coverage. I think it's $148.50 here in 2021. I'm not sure if the new numbers have come out for 2022 yet to see if that will change or not. But really, as an agent, I would not feel comfortable leaving any client of mine on just original Medicare. And if I was in front of an audience now, I'd ask, why the question, why wouldn't I feel comfortable? Well, obviously, is their Part A deductible of $1,484 that you'll have to satisfy every 60 days. So that's a cost that could definitely start to add up. Part B, 80-20% co-insurance split. So the client's responsible for 20% of the Part B charges. So if there was a $100,000 Part B doctor's or physician's bill, your client's responsible for 20% of that, or $20,000. And there's no annual maximum out of pocket. And that's kind of my biggest takeaway from original Medicare, where I wouldn't want to leave my client with just A and B, is there's no annual maximum out of pocket. So, maybe you got that $20,000 bill and later in the year, something else happens to you and you're responsible for another 20%. It can continue to add up with no ceiling. So there's no ceiling for the amount of cost that your client might pay for with original Medicare. So as an agent, we're going to position either the option in the middle or the option on the right. The option in the middle is a great option for clients if affordability is not a problem. You're adding a Medicare supplement plan to help fill the gaps of original Medicare. So that Medicare supplement plan will take care of that Part A deductible, will take care of that Part B 20% co-insurance that your client's responsible for. And I'll click on the next slide here and I'll kind of show those different plans that are available and what happens if, per se, you have a Plan G and how it would help fill the gaps. But one thing to note with the Medicare supplement plan is that you're going to be responsible for a monthly premium with that. So you're typically paying a monthly premium for your Plan F, Plan G, or Plan N, but at the end of the day, you're not seeing a lot of out-of-pocket exposure. So I want us to make sure that we understand those basics on a Medicare supplement plan. You're paying a monthly premium for your plan to fill the gaps of the original Medicare. And you can see on the left-hand side all the different plans that are available. The most common plans available out there right now are Plan F, Plan G, and Plan N. Plan F is no longer available to new beneficiaries after 1/1/2020, so something to be aware of. If you were a beneficiary prior to 1/1/2020, you are grandfathered in to continue to be able to have your same Plan F, or maybe go through underwriting and jump on another Plan F at a lower rate. Because the only difference between these plans from one carrier to another really typically is what the premium is. Obviously, there's ease of doing business and other factors as well with it, but a Plan F here in Missouri is going to be the same as a Plan F up there in Nebraska where Todd's at. And you can see Plan F covers pretty much all of the different out-of-pocket gaps of original Medicare. It covers that at pretty much 100%. So Plan F used to be the Cadillac plan, but the government wanted consumers to have a little bit more skin in the game. And that's where they've gotten rid of F and C, because they covered the Part B deductible of $203 as it sits here in 2021. You were seeing some clients go to the emergency room for minor colds or illnesses because they didn't have to pay anything out of pocket. The Plan F took care of everything. So the government wanted consumers to have a little bit more skin in the game. So that's why they got rid of that Plan F and Plan C for new beneficiaries. So it wasn't covering that Part B deductible. So we've seen a transition to, I would say, 75% of the market is enrolling in Plan Gs, because the only difference between a G and an F is that Part B deductible. Plan N is lingering in the background. I see a lot of value with Plan N out there as well. So Medicare supplement plans are great plans as long as your client can afford them, and affordability is not a factor. And you can go anywhere in the country that accepts Medicare. So again, there's no network with Medicare supplement plans. So talking about those different out-of-pocket gaps with original Medicare, you can see on the right-hand side of my screen here, that $1,484 plan or Part A deductible, the 80/20 co-insurance at the very end, skilled nursing, hospitalization days. If you've got a Medicare supplement Plan G and you're exposed to any of those costs, that Medicare supplement Plan G is going to cover you guys at 100%. So with that Plan G, it's taking care of all the gaps of original Medicare for a monthly premium. Now, not everybody can afford that monthly premium, and we're starting to see more and more of a shift into what we call Part C of Medicare, Medicare Advantage plans, which includes everything that original Medicare covers and maybe some additional benefits as well. So it includes Part A, Part B. Many times it's going to include your prescription drug coverage. We're seeing extra benefits like dental, vision, and hearing benefits added to these plans. And over 50% of Medicare Advantage plans throughout the country are $0 premium. So it's a great option for your clients. Now, they are confined to a specific network. So be aware that you can't go just anywhere. You do have to go in network. There's differences between the HMO plans and PPO plans, but this is a great option for consumers, especially those that affordability may be an issue with on a Medicare supplement plan, especially because there's a maximum out of pocket with these Medicare Advantage plans that original Medicare does not have, like we talked about earlier. So your Plan C is a great option. Usually it's a $0 premium, but what comes with that $0 premium is a trade-off in terms of copays and deductibles up to that maximum out of pocket. So where does the hospital indemnity plan really fit in the Medicare market? Fits like a glove around Medicare Advantage plans to help protect those clients from those different copays and out-of-pocket expenses that we talked about. But truly, there's no one-size-fits-all approach to Medicare. Each consumer is going to have a different opinion on terms of risk tolerance and, maybe the amount of funds that they've got in a savings where they could come out of pocket with a Medicare Advantage plan. So there's really just no one size fits all approach. And that's why I like to present this slide to the agents when I'm usually in person giving presentations, because it's just a different type of mindset. So you've got the woman above here. She's willing to pay higher premiums in trade for lower out-of-pocket costs and nationwide provider choice that comes with original Medicare. So I typically turn to the audience and say, what is she an ideal client for? Well, higher premiums in trade for lower out-of-pocket costs and nationwide provider choice. So nationwide provider choice that comes with original Medicare, that's immediately going to say, she's not really interested in having to abide by a network. She's willing to pay a premium in trade for lower out-of-pocket cost. This is an ideal client for a Medicare supplement plan. She's going to pay that premium, knowing that she's not really seeing much in terms of out-of-pocket cost outside of maybe that $203 Part B deductible. And she's got nationwide provider access for everybody that accepts original Medicare. So she's an ideal Medicare supplement client. The gentleman below, he'll prefer to save money on premiums and doesn't mind high out-of-pocket exposure and limited provider network. So looking at that person in his scenario, he'd be more of an ideal client for a Medicare Advantage plan. In this part of our presentation, I like to take the concept of a hospital indemnity plan and actually build it around a Medicare Advantage plan. I see agents on a weekly basis who tell me that they know they should be writing these plans. They know it'll benefit their client. They know they can in turn add additional commissions back into their pocketbook, but no one showed them actually how to do it. So I like to take the concept and put it in action with these next couple of slides here. So what we'll do in order to build a hospital indemnity plan, and this is what you guys would do out in the field as well, is review your client's summary of benefits on their Medicare Advantage plan to understand their different copays, identify the hospital copay, identify the maximum out of pocket, and then quote our plan to help build around this Medicare Advantage plan to protect their clients from those different copays. So what I've got on the screen now is a $0 premium MAPD summary of benefits. So what did I say that we should do first? Let's identify the hospitalization copay. You can see on that third line item down there, you've got a $340 copay for days 1 through 5. So that means if your client's hospitalized for 5 days, they're going to be responsible for $1,700. So again, if we didn't do our job as agents when enrolling our client into this plan, and something does happen to them, they're hospitalized for 5 days, they get that bill in the mail for $1,700, they're going to be looking at us as the agent saying, what is this bill about? Well, Mrs. Jones, when we talked about, when we sat down to enroll you into your Medicare Advantage plan, we presented the hospital indemnity plan, and you declined that coverage that would have helped protect you from these different costs here. And we do have some agents that actually use declination letters when they're out on appointments too, having their clients sign off that they're declining the coverage for the hospital indemnity plan. Or you could be the agent that goes from, that zero to a hero and say, hey, we actually took out that hospital indemnity plan to help protect you from these types of expenses. So let's go ahead and help get you started on filing a claim. So again, really important that we're doing our job, making sure we're educating our clients and the trade-off of a lot of those $0 premium plans by letting them know what their exposure can be, because a $1,700 bill in the mail all of a sudden could be quite the check to write for a client if they're unprepared to do so. You also have other costs down here: ambulance copay, emergency room copay, outpatient surgery copay, skilled nursing facility copay, and an annual maximum out of pocket of $4,500. So a lot of different dollar amounts that can start to add up and, eventually maybe push that client over $2,000 worth of out-of-pocket expenses. As I'm showing in this example right here, you've got that client experiences an accident or illness. They're taken in the ambulance to the emergency room, admitted to the hospital for 5 days. They could be up north of $2,000 in terms of out-of-pocket expenses while they're on this $0 premium Medicare Advantage plan. So what we want to do now is build the Secure Advantage Flex hospital indemnity plan around those different copays to help fill the gaps. So what we're going to do is, we know it's a $340 copay for 5 days. We're going to build our base plan at $350 per day for 5 days. The emergency room benefits are already built into our base plan at $150. And all we're going to do is add the $200 ambulance rider to our base plan in order to really surround the out-of-pocket gaps that this client has. And if we do so, it's going to be a monthly premium. And I always ask our agents, what do you think the monthly premium on a plan like this would be for an age 65-year-old? And, I'll get $40, $45, $50 out there. When we looked at that first slide and we talked about affordability, at age 65, this is only going to cost your client $31.53 when you include the household discount, which is incredibly easy to qualify for. So again, very affordable for your clients. You have your client protected with this product here. We're going to pay your policyholder a benefit of $2,100, which will cover anything that they would be responsible for in terms of those different copays that we looked at on their Medicare Advantage plan. And it'll also leave them with $85 left over that they can do whatever they want with at the end of the day, because this isn't an indemnity plan. So we're going to pay your client exactly what they've signed up for. So maybe they have a $400 per day plan. We're going to pay that at $400 per day because, again, it's an indemnity and that's what they've signed up for. Maybe they have pets that they'd have to put in boarding or some additional costs that they'd be responsible for from a hospitalization. So you're taking that, $350 and bumping up to $400 or $450. You can certainly do that all day long. Design it, however that client needs it to be designed, because again, it's an indemnity plan. We'll pay your client exactly what they've enrolled into. If we want to break it down from a little bit further in terms of a value perspective, because a lot of times we've got agents unclear on how our product pays out. It's not a one and done. It's not a one and done, or it's not a use it every year, one and done kind of policy. The plan restores every 60 days. The base plan restores every 60 days. So now we paid your client that $2,100 benefit that we just used in the example previously. Let's divide that $2,100 benefit divided by the monthly premium of $31.53. It gives us a figure of 66.660, which actually represents a monthly amount. Equate that into years. And basically what this is saying is it would take your client over 5.5 years to pay more in premium than he or she would receive in benefit from this one occurrence of this hospitalization and benefit payment to your client. Now, something happens 61 days later. There's a 60-day restoration period. 61 days later, your client's in the backyard cleaning out the gutters, fall off the ladder, take the ambulance to the emergency room, hospitalized for 5 days. We are going to pay your client another $2,100 worth of benefit because it was separated by a 60-day restoration period. Now your clients receive $4,200 from Heartland National, all within the same year. If you divide that by your monthly premium, it's going to take your client over 11 years to pay more in premium than he or she would receive in benefit. So really, you can break this down from a value perspective to your client and show them just how much value they can get out of having a product like this in terms of looking at it from a value perspective and looking at it from a premiums perspective and what this plan can actually pay out to your client. So really, two scenarios are going to happen to your client when they experience that accident or illness. They're going to get an invoice due immediately for north of $2,000 worth of charges, or they're going to be able to file a claim with Heartland National and get a check for $2,100 from us, where they can cover those out-of-pocket costs on their Medicare Advantage plan and maybe even have some leftover monies. And really hammering home the value point here, I've got an explanation of benefits and a check that we recently approved. Let's see here. You can see some of the service dates, I think, on here. Looks like late 2019, early 2020 service dates. But in terms of, what can this product pay out? Well, it can pay out anything from $150 ER benefit up to a claim like you see here for $18,600. So definitely in terms of value, this person here was protected from having our plan and received an $18,000 check from us in order to cover a lot of his hospitalization charges that this person, that this individual was experiencing. So this was for hospitalization days. Obviously, there's additional benefits you can get with our riders, the lump sum cancer rider that goes up to $20,000 worth of coverage. So there's a ton of value that can be taken from offering this client offering this plan to your clients. Now going furthermore and kind of looking at the opportunity here, the Medicare population is projected to increase from 54 million beneficiaries today to over 80 million beneficiaries by 2030. So if you thought you were late to the game as all these baby boomers are aging into Medicare, you're not by any means. You've still got 9 years where, you can see the stats below, 9 years left where there are going to be 10,000 people turning 65 a day from here 2021 through 2030. So again, if you thought you were late to the game, you're not. Up on this Medicare wave with us because there'll be a lot of opportunity from now till 2030. And then furthermore, beyond 2030, there will still be an increase, as you can see, up to 2050, that graph there that shows how this Medicare population is going to continue to boom. So now just we talked about Medicare beneficiaries and the population as a whole. Now we're going to look at the Medicare Advantage space. In 2019, 1/3, 34% of Medicare beneficiaries were enrolled into a Medicare Advantage plan, about 22 million. The Congressional Budget Office projects that the share of Medicare beneficiaries on the Medicare Advantage plan will rise to about 47% by 2029. And from some of the statistics that I've recently seen, it looks like we're going to exceed that. And by 2029, over 50% of Medicare beneficiaries will be enrolled into a Medicare Advantage plan. So you can see, from 2006, how it's continued to rise over these last 15-ish years, and it's projected to continue to rise as the networks get stronger and the benefits become more and more rich. These Medicare Advantage plans are going to continue to increase in popularity, and as those plans continue to increase, as I mentioned earlier, companion products like our hospital indemnity plan will continue to grow with it. So make sure that you're offering it as an agent because, we don't want someone coming into the home after you and saying, hey, did your previous client tell you, or asking your client about their hospital card? These plans come with a hospital card. If you have an agent come into the home and ask where your hospital card is to your client, and they say they don't have one, the agent may say, well, your existing agent didn't talk to you about coverage with the hospital indemnity plan, and they say no, and have that agent present this product to your client where it makes sense to them, and they write your client the hospital indemnity plan. There's more likelihood of that client changing agents during AEP and moving all of their business to that agent. So we don't want that happening. So let's just make sure we're offering the product to our clients. That way someone can't come back into the home after us and try to do that. So again, we kind of talked about the $0 premium, that trade-off about a Medicare Advantage plan. 56% of Medicare Advantage plans out there right now are a $0 premium, and we're still continuing to see that percentage grow throughout the country as these plans are offering those $0 premiums. So huge opportunity for agents with that Medicare Advantage plan market to be offering these companion type products. Where can you offer our product? Well, anywhere that you can see on this map here in the 36 state footprint that we have here. So all the way from Oregon, Alaska, Hawaii, all the way to the East Coast of Florida, Georgia, South Carolina, and North Carolina. So our product is available in that footprint throughout the country. We've got a base plan with some highlights and then some riders that you can attach to it. So let's take a look at some of the benefits of our product. Well, you can select a daily benefit from $100 to $600 per day for the event of an accident or sickness. You can select these in $50 increments. You can choose benefit periods from 3 to 10 days, 15, 20, or 31 days. So there's a lot of flexibility in that benefit period. If you've got a client that's got a 4-day hospitalization exposure at $400 per day, you can match it exactly with our plan. If it's 6 days at $250 per day, you could match it exactly with our plan. So we understood that plans throughout the country differ. Plans in Florida are going to be different than plans here in Missouri. So we wanted to give our agents the flexibility to really design our product around whatever Medicare Advantage plan that they're offering in what state or what county or what area they're in. Base plan also includes an observation benefit that pays 100% of the confinement amount above, up to 3 per calendar year. And then the only other thing that's included in our base plan is the emergency room benefit at $150 per admission, up to 4 per calendar year. And please note that that's not contingent on a hospital admission. So if you've got a client who believes they're having maybe a heart attack, they call for an ambulance, that ambulance picks them up, takes them to the emergency room. They're stabilized. It wasn't actually a heart attack, and they're sent home. They file that claim with Heartland National. We're going to pay that claim all day long. That $150 ER benefit, $200 ambulance benefit, we're going to pay that all day long, no questions asked. If they file it with one of our competitors, that claim is going to be denied because that client wasn't actually admitted to the hospital. So they've kind of got that contingency out there in the small print of their policies that say they won't pay either of those two benefits unless the client's admitted to the hospital. And that can create some heartburn for agents out there when you've got clients getting claims denied for $150, $200, $300. So we didn't want to do that. So we took out that type of contingency from our policy, and we'll pay those benefits all day long. Don't write with the competitors and let them create issues for you down the road on those small benefits. And then lastly, our base plan, again, as I mentioned earlier, restores every 60 days. Highlights of our base plan, again, we've got that guaranteed issue period we talked about earlier between 64.5 and 65.5. Issue ages 18 to 85. So again, as I mentioned, it fits like a glove in the Medicare market, but can certainly be used in that underage market as well, as we're seeing agents package it with ACA coverage or high deductible health insurance plans that are out there. We do have a 7% household discount, which in most states, it's incredibly easy to qualify for. You just have to live with someone else in the home, one, no more than 18 years of age or older, have resided with them for the past 12 months, or live with your partner. So it's typically not a 2-person apply rule, just living with someone 18 years of age or older for the past 12 months, or live with your partner. There are a couple of states or several states out there that do require 2 people apply, or one have the policy and another applying for the plan in order to qualify for that household discount, states like Oklahoma, Ohio, or Illinois. So just make sure you grab that app packet and read the household discount language on there before you take the product out in the field and start offering it. Make sure you understand that verbiage. We offer unisex rates. We don't discriminate tobacco versus non-tobacco. And another great piece of this product or feature of it is it's an issue age product. So the rates do not increase as the policyholder gets older. You're going to pay the same rate that you take the product out at the issue age that you were when you did so. So if you're age 64, you write and you take our product out, you're going to pay that 64-year-old rate for as long as you continue to pay the premiums there. The rates do not increase as the policyholder gets older. We do have a simplified issue application. So as long as your client answers no to those health questions, we're going to issue that policy and get you paid on it. We do have a 6-month pre-existing condition clause. So do be aware of that. If there was a previous condition, let's say, you had a client that was just 2 weeks ago said, hey, you got to have knee replacement surgery. So they come to you and try to take the plan out and then want to have that surgery within the first 6 months. They're not going to be eligible to do so because that was a pre-existing condition. Now, if they had the surgery 6 months and 1 day after, they could certainly, we'll certainly cover that claim, but we never advise any clients or any of our insureds to postpone treatment just to get coverage. But yes, anything that triggers a claim within the first 6 months that was advised to have treatment for 6 months prior to the effective would be a pre-existing condition. We wouldn't cover that initial condition. Anything outside of that 6 months window after the effective date, you're completely covered. And that doesn't, you're still covered for any accident that happens. You fall off the ladder per se. That's an accident. We're covering that day one coverage, or any type of illness that happens that wasn't advised to have kind of treatment for within the 6 months prior to. So just to be aware, 6 month pre-existing condition clause, usually, it's a non-factor, but something we want our agents to be aware of. This is a dual application for your clients. There is a one-time $25 application fee. If you enroll a husband and wife on the same application, you only have to take that fee one time. I didn't want you to have to sit down with a husband and take 25 from the husband, 25 from the wife. So you can enroll them both on one application and only have to pay one app fee. And then we've got 7 additional riders in most of our states that you can add to the plan to help customize it for your client. We've got the lump sum cancer benefit rider, which is really important, especially when you're looking at the maximum out of pocket. One of the main reasons your client will hit the max out of pocket on an MAPD plan is due to the diagnosis of cancer. So if it's a $4,500 maximum out of pocket, like we looked at earlier, we may consider having a $5,000 cancer rider to this plan to help satisfy that maximum out of pocket. You and I know cancer treatment can typically span more than 1 year, and you'll have to resatisfy that maximum out of pocket as you roll into the next plan year. So you may take that $5,000, even bump it to $10,000, knowing cancer treatment can span more than 1 year. So you can select anywhere from $1,000 to $20,000 worth of benefits. There is a built-in recurrence benefit, which I'll show you what that schedule looks like on our next slide. We pay for cancer in situ at 25% of the face amount, and we pay skin cancer at 5%. So I don't really see any plans out there paying any benefit for skin cancer, but we do pay 5% of the face amount with a diagnosis of skin cancer. Next riders are lump sum hospital confinement benefit rider between $500 and $2,500, eligible for up to two times per year. This is just a lump sum paid in addition to your base plan. So for example, you've got a $500 per day base plan at $300 per day. You add the $2,500 lump sum hospital confinement rider to your plan. You're hospitalized for 1 full day. You're going to get $500 from the base plan, $2,500 from the rider, or a full benefit payment back to your client for $3,000. $500 from the base, $2,500 from the rider, a $3,000 payment back to your client. So you could see where that rider may be really one that could be positioned in that underage market, especially those plans especially for those clients with those high deductible plans. Lastly, these on this slide here, the 2 other riders you can see kind of fit like a glove around that Medicare Advantage plan. You've got the ability to cover the outpatient surgery copay from $100 to $1,000 in 2 procedures per calendar year. And then you've got the ability to cover skilled nursing facility benefit rider for days 21 through 100 at either $150 per day or $200 per day. As we know with original Medicare, it's going to cover the first 20 days. So we've got a 20-day elimination period, and then our plan picks up and pays days 21 through 100 at whichever dollar amount selected there. And again, it's an indemnity plan. So if they choose the $200 per day plan, they're only responsible for, $172.50. They can do whatever they want with that additional money. We're going to pay them that full $200 for each day they were in that skilled nursing. One other piece of our cancer rider to explain to your clients, which is incredibly important and provides a ton of value, is that once you've been paid that out once, you go through treatment, a period of remission, and you're no longer having any signs of cancer, our recurrence benefit starts to build back up again. So that way we can protect your client in the event that they're diagnosed with cancer again down the road at some point. So year one, after being cancer-free, we're going to pay, that face amount's going to build back up to 10%. Year two, it's going to build up to 25%. Year three, it's going to build back up to 50%. Year four, 75%. And for 5 years or greater, it's going to restore back to 100% of that face amount. So that's an incredibly important feature of this rider to make sure that we're explaining to our clients, because the likelihood of getting diagnosed again is more for those that have been diagnosed one time. So we want to make sure we're not only protecting our clients on the original diagnosis, but having some coverage out there that could protect them again down the road. And that's with no additional premium. That's all built into that rider cost. So basically, we want our clients who are diagnosed with cancer focused on recovery and not how they're going to pay for the treatment. And that's why we offer this rider to our clients. You've got a check here that you can see an example of one of my mentors in the industry, Mr. Bill Ellsworth. You can see the plan's effective date was 4/13/2010. And I remember him telling me about this client. They were, on the fence on whether they wanted to take out this cancer rider or not. Eventually called Bill back up, said, hey, yes, I wanted to do so. And you can see down in 10/13/2013, the client was actually diagnosed with internal cancer, and Bill was able to help get that client a check for $10,000 worth of coverage. So, this isn't going to take away the fears or trepidation that the client has in terms of, going through the process of cancer treatment, but it'll certainly help alleviate some of the concerns they have on how they're going to pay for it or how they're going to pay for that maximum out of pocket with their Medicare Advantage plan. So an incredibly important rider to make sure we're discussing with our clients. The American Cancer Society says that 1 in 2 men over the course of their lifetime will be diagnosed with cancer. And for females, it's 1 in 3, and that number continues to increase. So really, really important. We've all been affected by cancer. And we want to make sure that we're protecting our clients in the event that happens to them. Other 3 riders we've got available: ambulance benefit rider. I see this rider added to 98% of the plans that come across my desk. $200 per trip, up to 3 per calendar year. Again, not contingent on a hospital admission. I think it's $2 and change to add that rider. So it's very, very affordable for your clients. And again, it comes across in about 98% of the plans that come across my desk. We also have a wellness benefit rider where we'll pay your client a $25 benefit for up to 4 different wellness tests throughout the year. So a colonoscopy, mammogram, pap smear, vision exam, hearing exam, stress test, physical exam, any of these different wellness tests you can see on the right-hand side. We'll pay your client a $25 benefit up to 4 times per year if they have any of those different wellness tests done, if they have this wellness rider attached to the plan. And then lastly, we've got a dental, vision, hearing rider that you can add to it as well for up to $1,000 per calendar year or $1,500 per calendar year. There is a $100 deductible that will need to be satisfied. And there's also a 3-month wait for preventative services to not be subject to that deductible. I'm sorry, it shows 1 month on the screen there. Missouri had us change that, and I was recently giving a Missouri presentation, but it's 3 months outside of Missouri for that preventative benefit to be paid, not subject to that deductible. So you've got your client, you're enrolling them in a $1,000 benefit, dental, vision, hearing product with our client. Go ahead and schedule that dental cleaning 3 months out, and we'll pay a $75 benefit for that dental cleaning. You can get a vision exam schedule for $50 worth of benefit, or a hearing exam schedule for a $50 benefit as well. So those are more of the preventative benefits that you can schedule 3 months out that aren't subject to our deductible. After 6 months, after a 6-month wait, they'll be able to go out and have fillings done, root canal treatment. They can go out and purchase eyeglasses or contact lenses. They can purchase hearing aids or any associated supplies or repairs to those hearing aids. Be aware, for the vision and hearing, there is a $200 maximum per calendar year. But I've seen most of the other companies out there showing, that maximum every 2 years. So if you wanted to go out and buy eyeglasses this year and contact lenses next year, you can certainly do so because you've got that $200 benefit that restores every 2 years. And then lastly, you've got our major services covered after 12 months, your bridges, crowns, dentures, and extractions. And at this point, you may be saying, well, how much are you actually paying? No plan pays 100% of those costs. Well, year one, we're paying 60% of actual charges, year two, 70%, and years 3 and beyond, we're paying 80%. Two key things to note on this slide here. We're paying off of actual charges, not usual, customary, and reasonable. So whatever the provider bills, we're paying 60, 70, or 80% of that. And that helps avoid any confusion on your clients where they may be paid off the UCR schedule where the provider is billing them a little bit more than what that UCR schedule reflects. Also, we're paying 80% of major services after 3 years or during that 3-year period of time. So most of the plans out there will cap at 50 or 60%. I don't see very many out there paying 80% of major services, but our plan will in that 3rd year of having this rider. So really, with the hospital indemnity plan, you're protecting them from the hospitalization, and then you could also be protecting them from having cancer or dental, vision, hearing. So 3 traditional standalone policies built into one with one company with one premium. And again, with the commissions, they don't reduce on any of those riders there because, those dental plans out there usually are paying 35, 40% for commissions. That's not the case with our product here. We're paying full commission for a hospital indemnity plan for the base and all of those riders. So I've had that question posed to me several times, and you're getting paid the full comp regardless on which riders you select there. So kind of talking about, different commission amounts, if you've got, I like to show this example here and what it can do for an agent's bottom line. We've got this sample rate for a 65-year-old with a 5-day plan at $350 per day with a $200 ambulance rider and $10,000 lump sum cancer benefit. You can see I built out the different premiums there in our generic states, minus your household discount. It's going to cost your client about $61.29 per month. If you present this product and sell 2 of these per week, you'll be able to increase your bottom line by over $40,000 per year annually. And again, during AEP, you're not getting paid on those MAPD plans, so it's a great way to help subsidize that income during AEP. But, bigger picture speaking, you can increase your bottom line by over $40,000 a year if you're writing as little as 2 of these per week. So just some thoughts on how you can sell it. Obviously, you can present the hospital indemnity plan during your MAPD appointment as long as you've got that scope initialed. So it's a great way to help fill those gaps that you're going to be talking about in your summary of benefits there. So I feel like this is the best time to present the product. Our quoting tool and e-application is incredibly simple. Once you've done it a couple of times, it's probably a 15-minute add-on where not only are you getting paid for your MAPD sale, but then you're getting paid additional commissions from your hospital indemnity plan, all with one appointment and only by taking another 15 minutes to go through the quoting tool and e-application. As long as you're presenting or as long as you're planting the seeds during that Medicare Advantage plan review, which we'll talk about how you can present those seeds and make sure we're pointing out those different costs and then offering that solution in these upcoming slides here. But if you're running and gunning and you just didn't have the time to do it during AEP, you can certainly do it, during OEP or anytime throughout the year. As I mentioned earlier, you can sell this product anytime throughout the year. And then lastly, we've got some agents as well, where their Medicare supplement plan will maybe just getting a little bit too expensive for their clients and they can no longer afford it. So you're going to bring them down to a Medicare Advantage plan, but knowing that they do have some affordability, you could offer that $30 to $50 hospital indemnity plan to help give them a little bit more light coverage to their Medicare supplement plan and protect them from those different copays that they may be responsible for. So now we're going to give you some tips on how to present the product, how to plant those seeds like we talked about. So when you're reviewing that summary of benefits with your client of that Medicare Advantage plan, it's important to stop on the different copays to make sure, we're pointing these out and educating them on the trade-off between a lot of times that $0 premium plan. So you can see here, we've got a $340 copay for days 1 through 5. That means, Mr. Jones, if you're in the hospital for 5 days, you are going to be responsible for $1,700. But then you can turn back to your client and say, but Mr. Jones, don't worry about that because I'm going to show you a plan that can help fill this gap in your coverage. Just don't let me forget. You continue with your review of that summary of benefits and you can stop on the ambulance copay of $225 and the emergency room copay of $90, and turn back to Mr. Jones and say, don't worry about paying that ambulance copay or that emergency room copay, because I'm going to show you why you won't have to worry about those charges. Just don't let me forget. You can continue to review and take that same concept and stop on the outpatient surgery at $340 and a $340 copay and say, Mr. Jones, well, don't worry about that charge again, because I'm going to show you why you won't have to pay for that. Continue with the review of that summary of benefits, pointing out the gaps in that coverage to make sure that your client's educated on the plan they're getting enrolled into, and there aren't any surprises down the road, while planting the seeds of maybe presenting the hospital indemnity plan a little bit later after reviewing and enrolling that client into an MAPD plan. So at the end of that review, you can turn back to Mr. Jones and let him know that's how his current program works and say, do you have any questions? And now at this point, you've already talked about potential copays that could be in excess of over $2,000. So your client's going to turn back to you and say, well, you told me, you said I wouldn't have to worry about all those different copays. Can you explain that a little bit more for me? Perfect. Mr. Jones, back when we started selling Medicare Advantage plans in 2005 with a 1/1/2006 effective date, we weren't really sure how those benefits were going to be paid out. And after a couple of years, we noticed our clients were paying quite a lot in out-of-pocket expenses when certain scenarios took place. So let me ask you a couple of quick questions, and this is where you can begin to role play with your client. Mr. Jones, have you ever been in an ambulance? Yes. Or even if they say no, that works as well. So if they say no, well, Mr. Jones, if you had been in an ambulance, where would the ambulance take you? And at this point, they're always going to say 9 out of 10 times to the hospital. You can say, well, yes, but specifically what part of the hospital? And they're usually going to say, well, the emergency room. So that's right, Mr. Jones. Now you've already triggered 2 co-payments on your Medicare Advantage plan, your ambulance copay and your emergency room copay. And now that they have you in the ER, one of 2 things are going to happen to you. They're going to stabilize you and send you home, or what else? Mr. Jones is going to turn back to you and say, well, they're going to admit me to the hospital. You're going to say, that's right. They're going to admit you to the hospital. And that's going to trigger the most expensive part of your Medicare Advantage plan, that $340 copay for each day you're in there, up to 5 days, or up to $1,700. So Mr. Jones, that's why we offer the hospital indemnity plan. And this is where you can bring out our brochure, you can bring out our quoting tool. That's why we offer this product, to really help protect our clients, in the event of an accident or illness, because as we get older, it's not a matter of if, it's a matter of when. And again, this product can restore every 60 days. So it not only pays out once, but can pay out multiple times down the road. You can get a ton of value with this product. Hand over the brochure, bring out our quoting tool, and start to look at how you can position and build this product around their Medicare Advantage plan. What we'll do now is we'll go over a couple of slides that talk about our quoting tool. But what would be good for you as the agent is to just be prepared when you're going out for that appointment. Know what MAPD plans you're going to proposition to your clients, and then build this product maybe on the back end around it. You can actually even print out copies of quotes here. It gives you the ability to print out copies of quotes here that you can bring with your clients. So you've already kind of know what you're going to build, what kind of flex plan you're going to build around their Medicare Advantage plan, because our quoting tool is really, really simple to use and really gives you that flexibility to build this product around, whatever their exposure is. So as you can see on the initial part of our quoting tool, ask you how many applicants. You can quote 1 or 2. We're going to quote 1 for this instance. We've got a test applicant, 5/25, 1955. I think that's about 65. We'll double check on the next slide here. Daily benefit amount, $350 per day for 5 days. We've chosen the state of Missouri. And yes, we've added the household discount. So what's your birth date? How much do you want per day? How many days? What state do you qualify for the household discount? Hit run quote. And this is the next screen that I really like, because it gives you the ability to plug and play with the benefits, especially those benefits that are important to your client, while also help meeting a price point if price points are concerned for your clients as well. So at age 65 here in this example, $350 per day, 5 days, $150 ER benefits included. That's going to cost your client roughly $31.50 per month. You add that ambulance rider at $200, and that's $2.40. So again, I see that added to 98% of these plans, and it's very, very affordable to add that ambulance rider, and it seems to make sense all day long. So $31.50 plus the $2.40 ambulance rider will keep you in the low $30 per month premium. But maybe you wanted to add $5,000 of lump sum cancer coverage to protect your client from that maximum out of pocket. That's going to cost about $16 per month. And again, that's including the recurrence benefit. So incredible value with that cancer rider there at $16 a month. You can also see I've added the skilled nursing facility rider at $200 for days 21 through 100 at $18.40. We've added $1,000 for dental, vision, hearing, and that's $35.40. What I wanted to do on this slide is just give you a ballpark of what those different riders would cost. But you can go as basic as the base plan with the ER benefit, or start to build it up with the base plan ER and cancer, or the base plan ER, cancer, and dental, vision, hearing. So you can build it however you like, and you can actually get your client involved in the process and make sure you're hitting that price point that you're targeting. But then you can also, do this before you go out on those appointments. And there's a button on the top. You can't see it on my screen, but that allows you to download this into a PDF. So you can have different examples for your client as well that you can present to them with different price points as well. So I think our quoting tool is the best in the business. Our application process is incredibly simple. On the very bottom, underneath that total monthly premium, you'll see a button that says apply now. That's where you'll go through our underwriting questions, unless you're within that guaranteed issue period. Enter your demographic information, walk through the EAP process. Again, it's about a 15-minute process. As long as you've done it a couple times before, you'll get through it in about 15 minutes. So it's a 15-minute add-on to your presentation to help put some more commission back into your pocket. And then we use DocuSign as our signature vendor. So you can actually capture that signature right then and there with your client. You'll choose DocuSign in person. Or if you've got a client that maybe declined the coverage, but called you, a week later and said, hey, I really should take that hospital indemnity plan out. I've been thinking about it. Well, you can actually take the application over the phone and you can send them an email or text message in order for that client to actually execute the application. So you can do it in person or you can do it over the phone. We give you that option so we can take care of your clients regardless of where they're at. But hopefully you guys have been able to take some value away from our presentation. We talked about a lot of different things, why you should sell it, where it fits in the market, how you can build it around a Medicare Advantage plan. We took a deep dive into the benefits, how you can present the product, and then our quoting and e-application. So hopefully, again, like I said, you guys have been able to take some value away, especially those agents who are relatively new, or maybe those who haven't presented this product before in the past. We are getting close to AEP, so let me help put more money back into your pocket during AEP while providing your client with more well-rounded coverage. And I just want to take a moment again to thank everybody for being on today's webinar. Thank Todd and the whole senior insurance marketing team. They've been a great partner of ours for many years promoting our products. And we just really, really appreciate the partnership there. So with that said, Todd, I will turn it back over to you and you can let me know if there were any questions. And if not, we can wrap up, but I appreciate it.
Hey, thanks, Nick. I really appreciate it. And again, it's a great product to sell, during AEP season as well as outside of AEP season as well too. So if you have any questions, feel free to put it in the Q&A box there, and we'll be happy to answer your questions for you on that. But again, give us a call here at Senior Insurance Marketing. Our number is 877-800-3080. And we'd be happy to get you contracted with Heartland National. So you're up and operational and ready to sell once the AEP period opens. It's hard to believe it's in a couple months here, Nick. So definitely give us a call. We'll be happy to help you out. Don't see any questions here. And again, Nick, thanks for showing us the Heartland National Hospital Indemnity product and all the riders that's available to add on to that product as well too. So again, give us a call here at Senior Insurance Marketing. Go to our website on our quoting tool. It's free of charge. The quoting tool is free of charge. Has the Heartland National Hospital Indemnity product on that as well too. So again, thanks a lot, Nick. I really appreciate it. And give us a call here at Senior Insurance Marketing or contact us through the website, because we're here to help you grow your business.